Hello friends, welcome to my channel ICICI India. Today we are diving into Q1 Financial Year 26 earnings for HDB Financial Services and ICICI Lombard. One shows slowing profit, the other strong growth. But what's the full picture? In the next 5 minutes, we are analyzing key numbers, market reaction, management commentary, and investor strategies. So, for more details, please subscribe to my channel ICICI India. So let's get started. So let's first discuss HDB Financial Services, the NBFC arm of HDFC Bank. Their Q1 PAT fell 2% to Rs 568 crore from Rs 582 crore a year ago, due to a sharp 63% jump in loan provisions, as gross stage 3 loans increased to 2.56%. However, revenue grew 15% to Rs 4,465 crore, driven by 18% growth in net interest income, thanks to a robust 14% loan book expansion. The drop in profit despite healthy NII growth points to rising credit cost, assets quality and provisioning are key watch points. So HDB Financial Services share closed around 842, just below the IPO listing levels of Rs 835 to 849. HDB debuted strongly at a 13% premium on listing day, but profit weakness and rising NPA may keep the stock range bound near Rs 830 to Rs 850. Breakout above would need sustained loan growth with controlled provisions. Now let's discuss what an investor should do for HDB. For long-term investors, if you believe in the growth of it unsecured loan book and performance under HDFC Bank percentage, accumulate near 830 to 835 on dips. This makes sense. Traders should watch 820 support and target Rs 865 to 880, stop loss around Rs 815. So key risk associated with this HDB is asset quality stress, especially rising stage 3 assets, and provision could wait further profits. Friends, let's now discuss ICICI Lombard, India's top general insurer. Q1 profit showed 29% to Rs 747 crore, driven by a 14% rise in net premium to Rs 5,136 crore, fueled by 44% growth in retail health and 13.5% in motor insurance. Profit before tax was Rs 994 crore, up from Rs 774 crore last year. However, the combined ratio was to 102.9%, indicating underwriting pressure. Post results, ICICI Lombard share hovered near 2014, down slightly, reflecting the rise in claim despite profit growth. Analysts flagged strong technical setup. Rohit Mehta noted a bullish breakout pattern with support near Rs 1,975 and resistance around Rs 2,100. The next big leg depends on combined ratio improvement and premium momentum. So now let's discuss what investors should do. Long-term investor may continue holding solid premium growth, high solvency ratio, and backing from ICICI Bank supports the outlook. Position near support Rs 1,975 with upside target of Rs 2,200 and Rs 2,250 if underwriting improves. Trader could claim for Rs 2,100 to 2,150 on near-term bounce with stop loss at Rs 1,950. Watch out, any uptick in claims from crop or reinsurance segment may further pressure the combined ratio. So friends, let's summarize. HDB shows loan growth but face assets quality concern, ideal for selective accumulation. ICICI Lombard impressed with growth, though insurance claim remains a risk. If you like more detailed analysis on any of these stocks, hit like button and subscribe and ring the bell for daily stock breakdowns. And let us know in the comments, are you buying, holding or watching these names? So please subscribe my channel ICICI India for more such updates. Thank you and Jai Hind.